Thank you for joining me again. This is Christopher Aaron. It is the 13th of April, 2016. Let's look at what has happened in gold and silver since the last update and bring everyone up to speed. We are entering that time period now where things are going to become a little bit more interesting as I see them. We've gotten through at least 2/3 of the doldrums, especially in the silver market. And it looks like over the next few months, we have some powerful patterns that are setting up. So let's take a look at everything together. So we're going to look at gold and silver side by side right now, just quickly over the last 3 days. A little bit weaker today on Wednesday in the gold market. And all this is basically technical action that we're seeing. If you notice, there's not really been any big news coming out in the gold market. It's all positioning at this point. It's related to movements in the dollar, movements in the stock markets, movements in other commodities. So we're just seeing that all play out here in gold. A little bit weaker today, but coming well off that retest level we were looking at around 1200 from a few days ago. Silver in comparison, now notice the difference. Silver today making a new high for the move, briefly flirting with the 1630 area before coming back to 1620. Now, as we know, for people who have been following this sort of analysis, the 1625 region is a very important resistance level. So we see here that there is a shift, at least over the last couple of days, as silver held on to its gains today compared to gold falling back. That's not what we have seen over the last several years. Let's look at silver from the 6-month time frame. And for anyone who is new, when I'm looking at 6 months of the chart action, I am usually looking at the SLV fund, which is an ETF, an exchange-traded fund that trades on the stock exchanges in the United States. And so the numbers that we're looking at here along this axis are not the exact spot price of silver. It's about $1 lower. But this lets us see intra-day action, minute by minute, hour by hour. Whereas when I switch to the spot price, it'll be for a day-to-day chart. So I've had this green circle up here for a number of weeks now, maybe even going back over a month if you look at some of the old videos. And I'd been saying, even as the price had come back down to the $14 to $15 region, I said, I have a higher target for silver. I've had this green highlight up here. The reason for that, the tip-off that I've had, and we're still not there. I still think it's going to move a little bit higher to confirm this initial target. The reason for that is because I was looking at the stock action for this company, Silver Wheaton, that I follow very closely for a number of years. I don't currently own Silver Wheaton. I have owned it in the past. I think it's an excellent company, but I don't own it because I believe there are some other companies that are going to be more highly leveraged to the price of silver for the next cycle that we are starting now. But anyway, the reason why I saw that silver would be moving higher is because this company, Silver Wheaton, had broken above its October highs from last year. You can see right here, had broken above that in February and has just been consolidating for basically 2 months above these highs. So if this company that derives a significant percentage of its profits from the price of silver was being bid up to these levels, it was tipping me off. It was providing me with an early clue when viewed in the proper time context that the price of silver, even as it had softened a few weeks ago, was not going to stay down that long. So moving that to the 1-year time frame now, what we are looking at, and now we are looking at the spot price of silver. Bring up our key here, which stays the same pretty much for every single chart. And if you are new to this system of analysis here, I want to just tell people quickly that the way I have labeled these charts here is based on a system that works for me. It's worked for me in the past, and what it allows is my eyes to be drawn to the important facets of the market in a quick way, so I can gauge the action in a quick way. So whenever you see, for example, this turquoise colored line here, that always means a trend line that we were looking at from the past that has now been broken, and it's labeled right down here. So a broken trend line, they are often lines that we still want to pay attention to because retests happen, or sometimes we have failed breakouts like we saw right here. But we no longer want to place as much of an emphasis on them as some of the primary or long-term trend lines that we will observe in some other charts. So the price of silver here, just to come back to it, what we see here is forming is what is called an inverse head and shoulders pattern. And this is a pattern that forms and develops over a rather lengthy bottoming process. This entire process going back to late last spring, really, beginning of June, through the present is really a bottoming process. And that takes various forms. You know, the exact specific bottom occurred in December, right around mid-December, here at a spot price of 1370. 1365, I believe, was the actual low. But when we're looking at a broader scale, and you'll see this when we zoom out later, this entire shoulder, head, and shoulder pattern is a bottoming process from the long term of these markets. So we derive this from this sort of visual. If you can imagine a silhouette of a person with a head in the middle, obviously, and two shoulders on each side, and then imagine that we flip that person upside down. He's standing on his head, so we have a shoulder, a rounded shoulder here, a rounded head that pokes, that moved one too far, the rounded head that pokes down below the shoulder, making a different profile, and then we're rounding out one more shoulder right here. Can you see that? So what we're looking at, this inverse head and shoulders pattern, we are in the right shoulder of this pattern. So that would be the final section of this long-term bottoming pattern. Now, the critical black horizontal support and resistance level here, which was the high that we hit in last October, is just now being tested again. And look at this. So for all intensive purposes, this region, the 16 to 1625 region, was tested once here in February, once in March, and now again in April. So typically the length of these shoulders, this shoulder being here from, let's call it mid-February through mid-April now, this is 2 months. This shoulder was from late October, stretching back from late June. So this was about a 4-month shoulder, about a 4-month head, and now we have a 2-month shoulder here. So I'm not 100% sure that silver is getting ready to break the shoulder yet. Ideally, these patterns like to be symmetrical. So 4 months here, 4 months here, and 4 months for the right shoulder, which would sort of extend out into perhaps late May or early June. Now, can these patterns break early? Absolutely. And the patterns are never 100% symmetrical, but they give us a strong idea of what's actually happening here. So look, another thing to notice about this head and shoulders pattern is, for example, this shoulder here stretched back down right to around the $14 level on the spot price. This shoulder so far has only hit $14.60 for a low. So what we have is a slightly lopsided inverse head and shoulders pattern. And when it's lopsided, when the right shoulder here is higher than the left shoulder, it basically means buyers did not wait to step in for this level that they did last September. So they bought earlier here. So this is actually a bullish, lopsided, inverse head and shoulders pattern. That's a mouthful, I know, but that's what's playing out here. So what is going to happen when this breaks? And again, I mean, this could break, if it's going to be really bullish, this could break next week. This could break tomorrow. If it wants to be symmetrical, if this market wants to stay symmetrical, then this pattern will back off perhaps one more time into the mid 15s, low 15s. And that would be it. And let's not mince words now. If you are just getting interested in the silver market, you need to now be buying hand over fist as much as you can anytime that the price gets back toward the $15 level. The days of $15 or sub $15 silver are very quickly coming to a close. Now, I don't sell any silver, so if I thought the price was going to go down, I would tell you to short it and make money that way. But I don't think the price is going to go down. My analysis shows me the vast bulk of the decline has happened. I called the bottom here about a month and a half later when I saw this downtrend break. So it was based on my technical reading of the market. So let's fast forward this. Let's zoom this out. And I'll show you how I think this is going to be setting up. Now you have to understand the psychology. These patterns, these lines, it's the same as looking at lines on a map. When you look at lines on a road map, what are you looking at? You're looking at the history of cars. Where have cars driven over the past 5, 10, 30 years? That's what defines a map, roads. It's the history of cars. What we're looking at here is the history of comers and goers in the silver market. So this idea that we can't learn anything, people who say, oh, well, this is just a bunch of lines. Yeah, so is a map. And there's no one who would these days go out into a new territory without at least having a map available. So it's the same thing with this. I mean, in fact, if you think about it, any study, anything that we're projecting into the future, what is it based off of? If we're saying, well, it's April, and in the northern hemisphere, we predict that by May or June, the temperature will be higher, it'll be warmer as spring turns into summer. What are we basing that off of? It's off of our knowledge of history. What has happened in the past helps us to predict the future. So it's the same thing for this. I just find it funny sometimes that people like to write off this form of analysis, but they're very willing to accept other forms of past historical analysis to help predict the future. Anyway, coming back to the charts. What is going to happen here to cause this shoulder to break higher? Which, by the way, will give us very quickly a target of 18 to 1850 on the spot price of silver. That could happen rather quickly. Just as, for example, just as this drop here from 1850 down to 15 happened over the course of just about a month and a half, you could see this move from 1625 to 1850 happen over the month and a half with very little pullback. So psychologically, what will be happening here when the shoulder breaks and starts moving higher is that all the people, especially in this head region, who were shorting silver, and there's still a lot of people out there. Here on this channel, I have an opinion, I have an assessment. Maybe some of you agree with me, some of you disagree, and that's fine. But we should not think that the vast majority of the world is in agreement with what I'm proposing here. There are many people out there that still believe silver is going a lot lower. So those people have been shorting silver. They've been selling silver in this region here, in the 14s and the 15s, hoping to buy it back later at a lower price, perhaps 12, 11, 10, and to profit from the price going down. So what happens when the price breaks and everyone is watching this 1625 level? Because this is a very clear technical level right here circled in red. So everyone is watching this level. And when the price breaks through that level, everyone who is shorting here is going to be forced to cover because they're going to finally recognize that this market has bottomed. And they're going to say, okay, I made a mistake in shorting. I need to get out of that short. And to get out of the short, they have to buy back the silver that they sold. That's the only way to close out a short, is to buy it back. So you'll see something like a quick spike here over the course of about a month, as everyone who was thinking it was going to go lower here is forced to buy back. And then the next wave happens when the people who just were sitting on the sidelines here realize that the price is not going to go any lower, and they start piling in. That's what accounts for the formation and the break of this shoulder and the quick move that we will see when that happens. So again, that could happen this week. I tended to think that it would wait until a little bit later in the spring, and perhaps we'll see that move later on in the summer. But I'm open to it moving quicker. I'm prepared. I'm invested. Looking at gold, we had a 2.5 year, almost a 3 year, very beautifully defined parallel trend channel moving downward, shown by all these hits: low, high, another high, low, low. Beautiful parallel trend channel here. To break in the beginning part of this year, finally, notably closing over the October high, breaking higher, and then starting what looks like a trending move higher. And when we saw the price start to retreat a few weeks ago, I made this circle right here saying this is where I would expect the price to come down to as a retest. Retesting this breakout here from October and retesting the broken downtrend shown in turquoise once again. So it looks to me like this retest was successful now. And it looks like the price of gold is going to start trending higher. And my thesis at this point is that it's going to trend higher, yes, in sort of a 2 steps forward, 1.5 giant steps back kind of motion, and really do so under the radar screens of most people. That's my thesis at this point, based on some of the models that I showed from the 70s. So it's not going to attract a whole lot of attention, and a lot of people are going to keep calling tops at each little new high that then falls back down, and then it makes a new high, then falls back down. That's the model that looks most likely to me. And I think the price of gold is going to wear people out as it moves through this kind of a channel throughout the later part of this year. Once we break above 1305, then there's going to be a lot more people that start to reassess and say, okay, maybe we are truly in the start of a new bull market here. I say we are already. Looking at the gold mining complex, for anyone who is subscribed to my premium service, I'm providing this for you because just 3 days ago in the weekend update, we were looking at this from the 1.5-year time perspective. And I said we're getting very close to breaking out of this primary blue downtrend that was forming here in the GDX fund. These are gold and silver mining companies whose profits are leveraged to the price of the metal itself. And guys, we have seen that breakout now over the last 3 days. This broke sooner than I anticipated. I thought perhaps we might consolidate for another few weeks or a few months and break sometime later in the summer. It has broken out now. So just to put that in perspective, the valuation of the companies that are searching and mining for gold and silver, as the price of gold has risen about 20% from its lows, the valuation of these companies have risen 90%. So you would have a 90% gain in the average gold and silver miner if you had been buying at the exact lows. Of course, no one was buying at the exact lows. Very few people. So we don't need to worry about that. But even if you were buying anywhere here in the mid-range, you have a nice 50% gain at least here on the broad sector. And some of our companies have been moving really nicely over the last few days. I'm very pleased to see the technical action in the breakouts for some of the companies that we are invested in. So my takeaway here for people who are investing with me or for those who are doing this on your own, the time to sit back and say, maybe this move is not for real, that time has passed. So if you are planning to make investments in this sector, the time to really come up with a game plan is right now, because I believe this is going to be the premier investment sector over the course of at least the next decade. I believe there are going to be fortunes to be made, not only in gold, yes, not only in silver, yes, but in the gold and silver mining sector. And we've seen a major hint of that already. And so I want to provide for people here in this main channel a piece of the intelligence that I provided in the last premium update, because I think this is important. That's why I have this channel. That's why I'm invested this way personally for some clients who I manage funds for. I think this is important because I don't know anyone else who is providing this historical perspective on what could happen in this sector. We are looking at here the XAU to the S&P 500 ratio. The XAU is similar to the GDX. It contains a basket of about 20 gold and silver mining companies. The S&P 500 is the broad U.S. stock market, the top 500 companies in the U.S. stock market. So we're looking at a ratio. The major important takeaway here is at the current valuation, this ratio stands at 0.038, which is very similar to the 2000 low at 0.030. So even that significant move in the gold and silver miners, up almost 90% already that we've seen, have only taken this ratio from the absolute lows that we saw in January, just right up to there where my mouse is. Just this tiny little blip here. Compared to what? Compared to where the ratio was at the last peak of the precious metals bull market, which was in 1980, when gold hit $850 per ounce and silver hit $50 in the year 1980. This ratio hit a 1-to-1 ratio, and it's currently at 0.038. This is the valuation of the gold and silver mining sector versus the rest of the U.S. economy. Both these things are real things. The gold mining industry, maybe aside from agriculture, and if I wanted to be historically accurate, I would probably have to throw in prostitution somewhere in there. The gold mining industry is probably one of the oldest industries in the history of the world. It's as old as civilization itself. It's an integral part of the broad economy. The S&P 500 goes back a few hundred years too, with this index or some of its derivatives, its constituents. And what you're looking at is basically that the gold mining sector is at the lowest valuation that it has been in over a generation. If we extend this chart back further, you're looking at 35, 40, 45 years that the valuation of the gold mining industry has not been this low relative to the rest of the U.S. economy. And both these things have real value. This sector digs gold and silver out of the ground. The rest of the economy does everything else. Yeah, some of which is bogus and fake. I completely agree. Much of the banking sector, etc., etc. But we have to admit there are some real companies in the U.S. economy that dig other minerals out of the ground, that produce medicines, that produce electricity, that produce other things that we need in our lives. So anyway, the takeaway of this is we are setting up for what looks like a multi-decade move back toward some of the previous peaks. And this will apply, yes, to gold bullion, yes, to silver bullion, and as well, and on a higher leveraged ratio to the companies that are digging those metals out of the ground. So this is my research. It's based on historical data. Obviously, my money is where my mouth is, so to speak, but that's for a reason. It's because I believe in this, based on the data, based on the research that I've seen. Is it possible for this ratio to go lower? A little bit. Yeah, it could go a little bit lower. But in the grand scheme of things, the gold and silver sector is much closer to a bottom than it is to a top. And how many people out there do you know of who are talking about this sector right now? People that you know at work, or articles in mainstream newspapers, Time Magazine, Newsweek. They don't talk about gold and silver mining companies. So we're at the very, very beginning of this move here, and I just want everyone to really appreciate the magnitude of the revaluation that's going to come. Note, however, I do not believe it's going to happen this year or next year. I think this is going to be a multi-year, perhaps even a multi-decade process that plays out here. My goal, my target for silver, for example, is $50 by 2021. My target for gold to re-challenge 1900 is by 2021. After that, we will have another discussion. In the short run, successful retest of the breakout from the down channel in gold. Silver, when 1625 breaks, expect a strong move toward 1825 for the initial surge. We'll talk when we get close to that point. And again, the strong leading indicators that we're seeing across the mining sector for both metals, as the miners continue to move higher, even as gold has not broken, for example, above 1285, where it was a few weeks ago. Thank you very much for watching, and the next update will be in 1 week's time. Hope you have an excellent rest of the week. Thank you for being here with me together.